Welcome to Money Talk with Aaron Ricketts, presented by Ricketts & Associates, 3245 North Adrian Highway, Suite F. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Let's welcome Aaron back into the studios this afternoon. Hey, Aaron.
Hey, John.
Well, same old, same old. You know, I'm kind of just amazed. You know, ordinarily, and I know I got a little off topic, but with so many people on unemployment, normally, I mean, that would just tank the economy, wouldn't it? But the markets seem to be holding up.
You're absolutely right. And that was going to be something I talked about, that it was interesting. Our company's research, provides us some information, as a general talking point, right? It's kind of the macroeconomic side of things. And the market, itself was down, and it bottomed right around March 23rd, which is, a month ago, right?
Right.
And since then, numbers are back from there to about minus 13%. And actually, a few days ago, early this week, it was down about 10%. So, had a few rough days here and there, and then some positive days. So, still, I agree. It's from year to date. It's the S&P 500, the 500 large companies, being down 13%. It really doesn't make much sense of how it's factoring in that information you just said. The millions of job losses. But I think that, how they say each time we have this a recession, or like we had in 2008 and 9, a severe recession, or we had the 2000 to 2002 and 3 recession, or 9/11. You remember those discussions where this time is different, right?
Right.
That's always the same. So I'm thinking, when people say, well, this time is different, for a lot of different reasons. There's no question the process, or how we got there, is different, right, with this virus. But, how we come out of it, nobody knows. And so it's clearly mostly speculation that's happening in the market. People are buying in. So I'm saying this with the thought of people are believing, at least I think the investors are believing, that this is going to be some type of V-shaped recovery, right? A severe drop within a few months, and a severe increase in the economic performance of the country in a few months. I don't know that that's correct, or I've seen a few articles that talk about the U-shaped, right? We'll stay down for a while, or at least our economic conditions, or the numbers will stay low, negative for a while, and then recover. But right from the beginning, I think there was a lot of, and I say from the beginning, it's only been 6 weeks to 2 months at the most, right, since we've been talking about this, when the information that we have about other countries and how they have recovered, and always the focus is on China, but actually there's other countries that have gone back to, in some fashion, normalcy, large countries. And China, the first case was December, beginning of December, and they didn't lock down till towards the end of January. Like January 23rd keeps popping in my head. And then about March 15th, so 6-7 weeks later, 90% of their country was back in business. People were going to work. So that's a pretty good swing, and I believe that's what they believe this country is going to do. I don't know that to be the case. We certainly have a lot of bad, negative information that's coming out every single day. I mean, it's in our face, right, every day.
Right.
And that includes the business, the market side of things. So all the financial information that's being written about, that is flowing through, mostly we read it online, is not very positive on a day-to-day basis. But the market is not reacting in that fashion. I mean, it's still down, right? It's still negative. And there are certain industries that are, still negative. Banks are still down, 50% or more off their year-to-date high. I'm sorry, not year-to-date high, just from year-to-date, which, they were even higher some more time in February. So banks, both big banks and regional banks, they're still quite negative, which I'm going to say I'm shocked by that, but why aren't they following the path of, the rest of the market?
Are there certain sectors of the economy that are actually trying to sell off, but they can't find buyers?
I haven't heard that. I don't know that. I mean, I look at this stuff every day, especially, in the last month. My focus is more on, estate planning and retirement planning, so I'm a long-term planner, but it's more, in my face day to day, right? And I got to be on top of those things to have those conversations with clients. I'm not seeing that there's any concern that there's more buyers. And let me talk a little bit more about those industries that are hit hard, plus the S&P 500. And I'll start with that because I wrote some notes down here to tell people this is a part of why sometimes the numbers are a little skewed when we see. I always talk about the S&P 500, right? The 500 large companies in the United States. Well, there's 3 or 4 companies at the top that are trillion-dollar companies of that 500, and then many or most of the companies in the S&P 500 are a few $billion, even a $billion company. There's a few in the S&P 500 up to 10 and 15 billion. A trillion is 1,000 billion. So there's a big difference, right, between all these smaller companies, maybe 50 to 100, that are worth 10 billion or less, that make up the majority of the companies that are in the 500. But the top 4 are trillion-dollar companies. So there's kind of this weighting issue. Weight, not WEIGHT, right? Not the wait for something. The weighting issue. So 25%, 30% of the S&P 500 is the value of it, meaning whatever the market is up or down, they'll have a pretty good push, right, up or down of those top 5, 10 companies. It's pretty shocking. So with that said, how are those companies doing, right? Because if they're moving the market, there must be a positive, a number of them being positive, right, in the top 10.
Right.
Well, what if I told you that 7 out of the 8 are have been it or over their value in their history? They're the highest that they've ever been. The number 1 company right now in size, in market capital size, is Microsoft, $1.3 trillion. Apple's number 2, $1.2 trillion. Amazon, $1.1 trillion. Google is up there near $900 billion. And then we get down to Facebook, Berkshire Hathaway, Johnson & Johnson, and Walmart, somewhere around $400 and $500 billion. That's the size of those companies. The only company that's not near or above their highs forever is Berkshire Hathaway, and they're off about 15 to 18% as of this week. So you could see, if you're invested in these companies that you probably own through your 401k or through mutual funds, because many mutual funds are heavy also in these companies because of their size and their ability, their share holding ability. So they're going to, be a big mover of that negative 13. And I hope I'm making myself clear. I just want to say that that's why possibly the market is doing so well, because those few companies that are still rocking and rolling. They say about 30 to 40% of this company is kicking on economy is kicking on all 8 cylinders. They're just rocking.
So
And
those companies are kind of like water, and they're buoying up the rest of the S&P 500.
yeah, it's another reason, right, to know you need to continue to diversify always in this market. It doesn't hurt to own one or two stocks on their own as a hunch or as an idea, but I'm so glad I've been a part of mutual funds most of my career, because, boy, you own some of these individual stocks, banks, cruise lines, casinos, oil companies, absolutely have taken a beating. I mean, oil companies are still down, 70, 80% off their highs for this year alone. Same with casinos and cruise lines. They're down, 50, 60, 70%. They got a long way to come back. And some of those that I mentioned might take a while, right, to get their businesses started back up.
Aaron, without being specific, can you kind of in a general way maybe talk a little bit about the questions that some of the people that are contacting you are asking you?
Sure. I think one question is from clients, because I have this same conversation with clients over and over and over again, and it's usually always, do I have enough money or income or money to get me the income that I need for the period of time that we've talked about, 10 years, 20 years, 30 years. So I always talk about having a portion of your account put away or put aside in some type of lower risk mutual fund that might be heavier in cash and bonds than it is in the stock market. And the reason we do that is very often we know what cash does, right? It's supposed to maintain its value, whatever it is. You got $5,000 in the bank. A month ago, you still got $5,000 in the bank, right? If you're invested in the S&P 500 and you have $5,000 in the market, you might have $4,000 or $3,000, a month ago. And bonds they work, let's say, inversely, or they're not what we call correlated to stocks. So what they often do is when stocks go down, like we've seen, bonds go up, and that's what we've seen. So you can have this type of mutual fund that has a balance. So let's own that kind of stuff to protect for income. So those are the questions I get about income. And, when we started the quarantine, the lockdown, whatever we want to call it, and we haven't been spending a lot of money, I put it out there to my clients, hey, if you want to delay, stop, reduce your monthly income, let me know. And I would say about 25 to 30 clients have stopped or reduced their monthly income. It's one thing that makes them feel good, I don't need it, and because I'm not spending that, money on my entertainment things. People need the money. They're getting the money because I got that, part of their portfolio segregated and, protect as much as we can. And that's probably my biggest question is the income side of things. Once in a while I'll get, from my radio shows or other questions, or people will ask me just in passing, will call and say, can I lose everything? Well, that's the one of the questions on the series exam when you get this license to be in this business is what's the opportunity for stocks? Well, the upside is infinity. The downside is zero. So absolutely, there's always that risk. So how do you mitigate that risk? Diversify, plan, protect, risk. How much risk are you willing to take personally, and how much, based on your income needs, how much risk should you be taking? And look at historically, what the market's done. So we look at all those things and then, build a portfolio from that. And I think the best thing I have seen so far with clients and how they understand is that we've shifted from a concern that there might be, a loss or a huge loss or, me never getting this money back to it's time to buy. What can we buy? What can we get into? Can we take some more risk? And I think that's just how we are as a society. Many of us much more positive than we are negative. It's hard to get past that sometimes on a daily basis, but we figure, I think most of us figure, 6 months, 12 months from now, maybe 18 months, maybe 2 years, we're going to, those that, stay invested and those that might take a little bit more risk are going to be the ones that are going to get rewarded for that.
Well, it's good advice. And if people want to have a conversation with you, because I know they keep doing that, how can they do that?
Give me a call, 265-3540.
And we're going to keep calling one another, aren't we?
Yep, we'll keep doing that until we don't have to do that anymore. How's that?
Yeah. It's been lonely here in the booth. But...
Well, it has been lonely in my office too, because
Yeah.
I come in here and close the door, and it is talking on the phone is one thing, but we like the person-to-person thing too.
All right. Well, thanks a lot, Aaron. We'll be talking to you again next week, and once again, the number to call.
265-3540.
Okay, Aaron. Thanks a lot. Be safe.
You too. Thanks, John.
That's Money Talk with Aaron Ricketts, presented by Ricketts Associates, 3245 North Adrian Highway, Suite F. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Join us once again next week for Money Talk here on 103.9 WLEN.